Good afternoon. This is Dennis Wood with the Active Trend Traders. Welcome to After Market Monday. This is the July 9th, 2019. I want to remind you that all the materials we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance does not guarantee or is it an indication of future performance. The objective of After Market Monday is one, to look at timely actionable intel at the beginning of each week. We'll then compare that to what we see when we do the session on Friday called Making Money Trading Stocks and ETFs, and we'll see how the market actually did compared to what we were seeing. We do a real quick market review, downside, looking for, more upside, more downside, more volatility, less traction. There's not very much traction. And then we'll take a look at some stocks, ETFs. Remember, basically, have patience. So one of the things I'm going to do a little bit differently than what we've done in the past, and I'm just going to jump right over into the reviews to take a look at those. Okay, there should be a weekly chart over here and a daily chart over here. Let's start with the spiders. The spiders basically gapped up and then didn't go very far. They gapped up there. The spiders do have resistance up here about the 280 level, somewhere to 279, 280. Again, TSI on a weekly chart kind of ticked up a little bit. Continued to tick up here on a daily chart. But again, if price action gets into this 279 to 280, unless we break out, that will be the level where it will probably pull back into the moving average. Right now, we may be getting into one of these sideways moves. It's a little bit over 10 points, and so that is a nice trading range if that's how you want to trade it. So that's where they're looking for the SPY, the Qs. Qs pushing on up just like the NASDAQ up into past resistance, where at right about the 177, 178 level. Up move, nice up move here. Not a lot of volume on the Qs to push them higher, but definitely they did a real nice bounce a little bit over a week ago off the 50, broken back up through the 820. And all the moving averages are now in, pushing towards the upside. If we push through the this level, I think this is the old high. It's about, oh no, that's 100% retracement. Okay, the old high. If we push back through the about 178 level breakout, then that 178 then becomes new levels of support for us that we would look to basically make trades off of that level. IWM has basically, again, just like the other stocks, got our ETFs and indexes have gotten right back up towards the old level of resistance, up towards 170. If we push higher, that would be a normal ceiling / resistance area. Get a little bit of a bearish hanging man today. I wouldn't really categorize it as a hanging man because its wick isn't quite long enough. What are the, if we take a look at what the intradays are also telling us, as you can see, we gapped up. However, the intraday TSI, in other words, the sign of momentum intraday on a half-hour chart, didn't hardly move. We flipped this over to an hourly chart. Okay. And as you can see, actually, even though we were pushing higher, the hourly chart was showing a little bit of negative divergence. Now, the negative divergence you see in an hourly chart isn't going to impact the daily chart that much. However, it's where the first initial clues start showing up that, well, maybe there's some weakness that's coming on. Now, when I say weakness, am I expecting this huge, big sell-off? No. But definitely, it would be nice to get a pullback into the moving averages for a bounce higher. I mean, tomorrow morning, with great news and all that kind of stuff, if we blow through this 170 level on good volume, then we do have a new breakout to new highs, and now that breakout then becomes a level of support, similar for the Qs for the NASDAQ. I like IWM, and I like the Qs for both trading the NASDAQ and the Russell. A couple of stocks we were looking at as we were, I think I put both of these out because we did a Bay Area Moneymaker meeting on Saturday this week. I did put out a couple of free setup trades. One was on BABA. We wanted to see a pullback down into about the 189, 190 level. Didn't quite get it today, but it was close. I sent out an email that had these criteria on them. As you can see, BABA. What was our entry? We're looking at 189.50. That's where we wanted to get in. How far did we get? We actually got down to 190. Today's level low 190.87. So 189.50 would be slightly below the midsection of this candle. Now the 8-day moving average is coming up a little bit, and so I'm going to let that trade go on for a couple of days. If price action does get down around the 8-day moving average, everything else still looks in gear to the upside, that would be a good trigger place for a potential trade also to do. So I may have to adjust that trade in order to get in off the 8-day moving average. That's fine. The other one, HTHT. Again, both of these are Chinese stocks with the anticipation that the Chinese market, which is in a bear market, has been in one almost basically started to decline back in January of this year. It has retracted in excess of 20%. So by definition, yes, it is in a bear market. Well, some of it's the better stocks in China will start coming out of that bear more, will come out of it sooner than the others. So both HT, BABA, Baidu, those are the kind of Chinese stocks you want to be looking at for potential long side trades as they set up. We had a really nice setup, bullish engulfing on HTHT this past week. Price action got down to a low of 41.71. What was my trigger to get us in? Okay, 41.45. So again, I'm going to hold the 41.45 as my trigger. And may adjust that come tomorrow, but we'll see what happens with the intraday charts. See if we pull back down into this area again at 41.50 level. It actually got down to just actually the highs here from this, where it broke out above that level to the upside. And so that's the way with the pullbacks occasionally. We're just going to flat, sometimes miss them because we're doing an estimate of where we think prices will fall to. I took my price to be off of the kind of the body there of these candles. Let me show you how I did that just real quick so you'll have an idea. And also that, and bam. What I did was I basically took, here's the daily chart, price action actually came down to the high there of that breakout. Typically the bodies of the candles are a little bit stronger. It basically is a stronger indicator. And those bodies were sitting just at about, let's see what level they were at. They were at the 41.31 level, and that's why I went just slightly above that at 41.35. This morning, price action took the high side of this candle here, which was a small swing high, and it ricocheted off of that. So we'll keep that in mind. We'll watch over the next couple of days, somewhere between 41.45 and 42. If we're to maintain this uptrend, we'll be at a place where we want to look to go get long in this particular entity. I want to wait now though for my intraday chart, my 1 hour intraday chart, or my 30-minute intraday chart to actually pull back down into an oversold condition, and then look to trade off of that level. And those tend to happen quite often. Now, it may give me an oversold just at the 0 line and then bounce up from there. So what else do we have going on here? Our buddy, we are in a trade on JNEG. It launched out basically JNEG. We're actually in it from down here. We zipped up, hit the 200-day moving average, and then basically fell from there. But we stayed above Friday's candle. I wouldn't call this necessarily a bearish reversal, but because it did not engulf anything, but it is a large sell-off type candle from a level of resistance. We're anticipating this to be our gold seasonal trade, and so I will be looking for. Here's what I'll be looking for JNEG to do. I have a half position on JNEG. Looking for JNEG possibly to pull back from here. So where? No, I wouldn't want it to pull back any much more than the lower end of this candle or 14 when the moving averages catch up. And if that happens and the moving averages do catch up, then I would look to add to my position at around somewhere in that zone right there. So somewhere between $14.16 and $14, maybe a little bit less than that, but at the 50-day moving average. That's where I'd be looking to add to my position. What about GDL? Our gold, our gold trade that we're looking at, and this is another one where I'm looking at, okay, it too gapped up, sold off all day long. However, it has basically, we have put in a swing low, and if we go back and look at what it did in July of July of last year, zip over here to the left a little bit. And we'll find the I guess I could do that quicker by just sliding over this way. There we go. Here's July of last year. What did it look like compared to this year? Well, one, we came down, we started putting some bottoming candles in. It gapped up, gave us a nice trigger to get in. After an earlier trigger failed, the secondary trigger did in fact work off the TSI, gapped up, pulled back, and then took off again. The run last July, about, well, this is on gold, about 10%, 10 to 13%. So what I'm anticipating is if we get that same, similar type situation now, we hit a low, TSI ticked up, excellent, we push back up. Now we may get a pullback back into the, to this 118.50-ish level, and then ricochet, then proceed higher from there. If we get a similar move to, let's say 13% or 10 to 13% from this low here, that will put us up in, let's just go up 10%. Right there's about 10%, up to about the 129. So my target on the particular seasonal trade is somewhere between 128 and 130. And time frame for that happening, well, if you look over here on the weekly chart, it took 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks for the target to be achieved. And so got into the trade in July, and 9 weeks later, it hit its high, sold off, and we know, based on the seasonal charts, that gold tends to run out of gas with the seasonal move. The initial seasonal move tends to run out of gas around the mid-September to early October timeframe. And so, again, it reached up here, tagged 128, fell. Anticipating a similar type move here. Reach up here, tag 28, and you know, I'm not going to be greedy. That's where I'm going to basically be ready to take my position off the table. So that takes care of gold. That takes care of HTT, HT, and so that we wanted to cover. Let's run back to the slides really quick. That give you some ideas for trades going into the rest of the week. Okay, and with active trend trading, as you know, we follow 3 strategies. We follow 4 entry rules, 6 exit rules. We're in a bonus trade on JNUG. We're looking for and we have a setup on HT. It is not triggered in yet. Again, that is a bonus trade for active trend traders. Premium members, of course, got your alert last night to get set up ready for the trade this morning. And then strategy 2, I'm looking for some openings for strategy 2 trades this week. Nothing turned on today. Here's an example of the 5 pillars of active trend trading that we follow. 1 is that basically with the 5 pillars, what to trade is defined. So in this case, it's JNUG, strong growth stock or premium ETFs. That's all that we trade in the system. Basically, when to enter, pillar number 2. In this case, we entered down here at 1330, right there. When to exit, we define that based on classical technical analysis and or past history with a particular entity like JNUG. We'll define where to exit, what strategy we're going to use. In this case, we're buying the ETF. And so far, you know, as of when I wrote up this slide, it was up about $845. It is up a little bit more than that because, remember, it gapped open this morning, closed and hit 15, and then closed back down into last week's candle. So our expectations are probability of success, 65% win-loss ratio. And then additionally, for premium members, I do send out this little table that basically provides entry, stop loss, profit targets, and so that you can basically just put the order in. And if you're going to trail or parallel trade with us, put the order in, and you'll know the targets that I'm anticipating and expecting. Again, that's that is pillar number 5, knowing what to expect. And so, okay, let's see. So just to close out for today, stocks ETFs setting up for the July 8th and beyond. Looking for the market to continue on with this, kind of the tariff tango. Interesting how the market it actually reacted positively on Friday when the tariffs went into effect. I'm looking for entries for oil and gold seasonalities, and then there will be some earning trades going on. A big earnings announcement to be looking at is Netflix. I believe it's aftermarket on the 16th. That has the potential of moving the market somewhat. So, seasonal expectations, volatility continue high, wide ranges. The market is still on edge and has a hair trigger based on news. And then, as we know, we're anticipating July seasonality moves in both oil and gold. Those trades we talked about, first strategies for ETFs, and there's our gold section, and there's our crude section. Around the July time, we tend to get a bid in crude. So that's what I have today for today. Please review Gush. I certainly will, Eric. I want to say thank you very much for joining us today. I'm trying to keep these really, really short. How long did we go so far? We went about 20 minutes. I want to get it down to where it's about 10 to 15 minutes. So that's why I'm going to be highlighting the charts first, and then just a real quick summary, because for many people, they've already seen the slides before. So I want to show the charts with the setups, the potential setups, so that you can plan according to one of the week. And then I will hit real quickly on now. What's interesting with Gush is Gush went on very nice. It won its way very nicely today. And what Gush is basically a 3-time leverage ETF, and it follows kind of the XOP, which is the oil and gas exploration ETF. You can see it's broken at, it is reached up, and so you might see that Gush has actually done a little bit better. That's fine. Let's take okay, Gush. No, Gush has actually done the similar thing. Okay, what do we have here? A daily chart. It has gotten up into, it's getting up into this area where it found past resistance. Is it going to roll off there and continue, to fall? Don't know. So we see here, we are pushing on up into the, it's still got a ways to go. As you can see, it still has, we get a breakout to the upside. However, we have not taken out this high. If we take out the 47 level, then we are probably going to rack it up here to the $65 level, which is about another 39%. So if we do get the breakout, you can use that breakout level as support to plan trades off. That's a $47 level, or wait for things to pull back into the 820 combo, which would be over, which just bounced off of last Friday. But we do have a breakout of the triangle now, so we anticipate it to move on from there. If we're looking at a triangle move, we can go down to approximately here. You can do this a lot of different ways, but you can pull up the very conservative way of approaching with the triangle. So that's a $10.47 move. We just had a breakout from here. So go up $10.47, which puts you up to about a little bit over $52 for your next upside target. And you do run, as you can see, you start running into some resistance over here. Let's take a real quick look at BOP, but I want to take a look at it on a longer term chart. And this is one of the things I was looking at this past weekend. XOP, I'm sorry, XOP. This is a longer term chart, and this is a monthly over here. And as you can see, from a monthly perspective, we had a big, huge sell-off, drop down here, hit a low, and it's now starting to build its way back up. If you take just straight extensions off of this, off the fib, it has us going to, this is assuming symmetry. This has XOP, 100% extension would be 5246. 1618 extension would be up here at 6691. Let's pop that over to Gush. Okay, let's put that over to Gush. Well, if Dennis could spell Gush, we would be, there we go. Okay, let's see if we get a similar type setup. It is kind of, we can take this high to this high to this low. And as you can see, it's already reached 100% of the extension. 1618 would put you up at $55. 2618 would put you up at 79. And so that's one of the reasons why, when we do these kind of things, it's best to do your expected moves off of the non-leveraged, because the leveraged, sometimes they just get really, really wonky in the way they do things. Let's see if we can get a better, yep, it all still shows the same thing over here. As you see, Gush is volatile, but it is, hey, it's, it will, if you trade it well, you can do quite well with it. I know, Eric, you've been trading it for quite some time, and I think you said you were up about 40% for the year so far. I don't know if it's just trading Gush or not, but you're doing really well for the year with the active trend trading system. Okay, my friends, sorry for going a little bit longer, but when you ask for a special one, anyway, well, I'll bid you adieu until premium members. We'll see you on Wednesday night. I've got a really great session planned for Wednesday night. I'm calling it audible. I'm going to be covering on Wednesday night. I am going to be covering how to improve the TSI performance using candlesticks, proper candlesticks, and I think you'll find that exceptionally interesting. So with that, I bid you adieu. Good day, everybody. Aloha, and God bless.